Thank you for tuning in to another week of Help Nobody Told Me. I'm Jasmine Shapiro. I am with Berkshire Hathaway Home Services Chicago, along with my co-host Shannon Johnson.
And we are here today to talk about long-term care. What is long-term care? You know, it's not a disease, it's not a chronic illness, it's not a place, it's a life-changing event. So we have Randall Wubs here today. He's an independent professional focused on helping individuals, families, business owners create plans that protect the financial, physical, and emotional well-being of their clients and families. So tell us a little bit more about that, Randy, and your background before we get started.
Yeah, when I say that on that first point, people say, what do you mean a life-changing event? Because everybody thinks that long-term care is, as you noted, something that happens or a place you have to go. And it's not. It is something that actually happens to you, but the bleed over effect is on other people in your life. And it's the reality of life. It's the natural, normal human experience of aging and the challenges and the different things that it brings on. And for most people, that does flow into the laps in the lives of the people closest to them. It really does. It has lasting consequences, and it affects people more than they realize. That's why I say it's a life-changing event. In the mental, physical, financial, career, time stress, the whole ball of wax. And most people have seen it. Mm-hmm. Not enough have taken the time to slow down and let's look at this seriously and unpack it like you have today. So thanks for the invitation. Yeah. I know we're going to have a good conversation.
We're going to have a great time.
Yeah, we are.
So
yeah.
What is long-term care? Is it an insurance policy? What exactly is it?
Well, long-term care is helping someone who can't actually get through their day. Okay. It's not medical care. Not medical care. There's a difference between medical care and custodial care. And I'll repeat that again because you brought up some really interesting questions to unpack this.
Okay.
Medical care are the things that we need once an illness or an injury has been dealt with, kind of like in rehab. Once we come out, that's medical care, in other words. There is medical care that's delivered in medical facilities and in homes by certified professionals and stuff. We step on the other side of the track, and long-term care is custodial care, meaning helping you maintain your life, get through your basic activities of daily living, with the air quotes, all the things that we all did, you're shaking your head, that we did for ourselves on our own, without any help every day when we got up, and we don't really think second about it.
Right.
When somebody's gone through something significant, which is a setback and it's going to stay that way, that's where they need some help. Either standby for safety or hands-on if a chronic condition has progressed. Make sense?
Yeah, and I think planning long-term care ahead of time is really a gift to your family.
Huge. Where'd you read that?
I think you told us that outside.
I think we lived it.
It's really true. There's 1,000 quotes like that, Shannon, that say it's a second gift of life to your children.
It truly is.
It's a decision of love. It's not checking a box, and this is not done in fear or dread or anything like that. I'm not a statistics person. They make all our eyes glaze over.
Yeah.
Most people are going to live a long life, and it brings on some challenges. And so planning truly is a gift to the people that are most important to, and as I say, the people that you love, that you swore to protect and provide for.
Right.
Whether it's spouses or facing the other direction with parents or children. I mean, it's just, think about it.
So when do you start planning this? Like at what age?
Now.
So, okay, but when you're talking to a general public, I mean, like in your 20s and your 30s, I mean, like at what age do people start planning for this?
Good question.
After you sign the marriage certificate?
Well, you never know.
And sometimes you're not married.
Because then it's not all about it's not all about you anymore when you commit yourself to somebody else, or to your point, when you're single, the stakes are even higher.
Right.
Because there's nobody in the confines of your home that could perhaps assist in that role. So, to your question, I always say, typically our check engine lights start coming on in our 50s. Okay. Fair statement? Some earlier, some later, things like that. The average age, when I look at all the clients that I've helped with over the last 18 years, average age is mid-50s. Now, I do have some that are in their 40s radiologist from a hospital in Evans said, "It's going to be a short conversation, Randy. We just went through hell and back with my mom-in-law, and I don't want it to happen here in our home.
Right.
We're grown-ups, we know better." So, to your point, sooner the better. Maybe not 20, 30 something. People can do that. Typically late 40s, early 50s.
So that's okay to wait till you're 50 to start. It's better to start early, obviously.
It's better to start early, and here's the reason. You're never going to be healthier or younger than you are right now.
Right.
Right.
Thank you, right? I mean,
Yeah, of
and I
course.
always say to people, capture that.
Yeah.
Because once you're in, you're in. It's kind of like life insurance, Shannon, where you are your age, your health, your risk level to this other company, which is
Right.
going to give you a really big check if that day comes. That's locked in as you are right now, and they never have to take a second look at you. You've got it set. Does that make sense?
Yes.
Yeah.
Sooner the better once you begin to understand the importance of it all.
Well, and you don't know when something is going to happen.
No, we don't have a crystal ball.
I have a friend who in his mid 40s, he was perfectly healthy man, paddleboarded, did all these things and had a stroke. He is permanently disabled
Isn't that something?
and he still had kids in like grade school at the time.
Right.
So it can happen earlier than we realize. We have to be realistic about it.
It can
Life.
happen. It's either something that happens to you, like that with an activity of life. It's something that sneaks up from a health standpoint, or something that happens from the outside. You get in a major catastrophic accident, or
Yeah.
the parachute doesn't open. I mean, it just
Right.
there are so many things. And again, I'm going to keep circling back to this is not a fear of all kinds of terrible
Right.
things happen. It's a responsible,
Preparation.
gracious way of planning that's thoughtful. You do it with clarity, you do it with intention, and you have established, to your point earlier, the peace of mind for yourself that you're going to be able to navigate the future no matter what curveballs are thrown at you.
Absolutely.
Yeah.
So what are the consequences when there is no plan?
They're vast. When there is no plan, people scramble, and those that lean in as the primary caregivers put their lives aside. Those are the things that we see all the time, and because someone's important to you, you're going to lean in and you're going to care for them. You're going to put your life aside, and what we see a lot is caregivers, primary caregivers, person behind closed doors in the home, their life becomes debilitated in a fairly short order because long-term care, chronic care, whatever you want to call this thing, it can quickly escalate into 24/7 care. And it's exhausting to the person doing it. So if you have to focus your attention, your time, your emotions, your energy, your finances as it progresses, your career. I mean, you want me to go into the list, it's long,
Right.
but that is one of the major things that drives people to the table to say, let's talk about this.
Right.
I need to look in the mirror, Randy.
So for adult children listening today,
Mm-hmm.
how do they know if their parents are at risk, like at real risk?
Be observant. Watch for what I call kind of the signs of aging and decline. Memory, judgment, safety, healthcare, mobility. Sometimes they're subtle, and most of the time they grow over time. You can see changes. You gotta decide when is the stopping point where there's a safety issue here and such.
I know
But again,
we hear sometimes like kids that don't live in the same state as their parents.
Right.
And they come home, they haven't seen their parents for a while,
Yeah.
and they come home and they're like, holy moly, like things are not
There's
the
dents
same.
in the car, and they're like, "Where did these dents
good.
come from?" They're like,
Or unpaid bills,
Yeah.
or clutter everywhere.
Some of those things, to your point, where you see these gradually increasing in the absence of a chronic illness, okay? It's just a decline leading to the frailty of natural aging. Longevity is the issue here. Because, it doesn't take far to look around and say, even if people don't take care of themselves, there's a therapy, there's an assistive technology, there's a drug or something which can extend their lives.
Right.
And it's great, but it's a double-edged sword.
It
Right.
is.
Makes sense? It really is.
Totally.
It really is, yeah. So watch for the changes with parents.
Okay.
Pay attention
Absolutely.
with those kind of things in mind.
Okay.
Okay, let's do some myth busting.
Okay.
Jasmine, you got some questions?
So some lightning round questions
All
here.
right.
Okay. Medicare covers long-term care. Truth or false?
It's a myth.
Okay.
Medicare covers the first 100 days after you are released from the hospital in a rehab center. And what that means is when you're released from a rehab center for a host of reasons, it's you have plateaued. It's as good as you're going to get. Then you're on your own. If you look at your Medicare booklets,
Wow.
it's probably on page, I should know it, but Medicare does not cover long-term care, and that is defined as Medicare is medical care, long-term care or extended care is custodial. Remember the difference?
Right.
Okay.
Right.
Big, huge confusion with people.
Okay. Myth or reality? Reality, sorry. If it gets bad, Medicaid will just pay without strings.
And that's a huge myth because Medicaid has been a godsend for a lot of people, but it's an extremely expensive program to get into and to qualify for because you have to spend down all of your own assets first in order for the state and federal programs for CMS to pay for your care and keeping. And that is all of us. And I have no problem paying my taxes to take care of people of lesser means, but most of the Medicaid dollars are spent on people in nursing homes, and about half of them don't actually need to be there.
Oh, wow.
That is changing. I have to qualify that. That is changing, but it's kind of like an iceberg moving. It's slowly being opened up to a little bit of home care here and there. It's a good program, but it's incredibly expensive to qualify for.
Okay. Myth or reality? It's too late. I'm over 65, or I have health issues.
You know, kind of like life insurance, the younger and healthier you are, the lower cost it is. You get a little bit older, they say, all right, your lifespan, you're a little bit closer to perhaps using some of this. So costing could be a little bit more. We turn the dials and pull the levers to make it work. But even if there's health issues, there are companies that will take what's called impaired risk. You're a little higher risk because we know what we're doing for the last 200 years. So there absolutely are options. And I'm talking primarily beyond typical insurance that we understand. So there's a lot of different options, and I know we're going to get to that too.
Okay. We'll self-insure. We have savings.
Let's kind of correct the term there. Self-insure, there is actually self-funding because there is no insurance. It's all your own money. It's all your own money.
Yeah.
Is that what you want to do with your money, or do you have other plans for it? And I have some thoughts about that.
And how quick is that money going to go?
Yeah.
You talk to financial advisors and they'll say, I've seen far too many 401ks turn into a 201k in 2 years.
Yeah.
What do you mean? Oh, okay.
Yeah.
You never meant to spend it that fast.
Right. Premiums always go up, and benefits never pay.
No and no.
Okay.
Some premiums go up, some don't, depending on the carrier. There used to be 120 life insurance companies that actually said, that's a great idea, we're going to do long-term care. Now there's about 9 because they learned their lesson that people hold on to these, don't give them up, and they use them for longer. And you all ladies use them more and longer because you outlive us men.
Yeah.
Okay? Seriously.
Yeah.
So some premiums go up for certain reasons. They can't just say, well, most importantly, you can never have a long-term care insurance premium raised because you got older or you got sick. You are locked in. Remember we talked about a couple of minutes ago?
Right.
You are locked in. They can only raise it in a massive block of policies because they got to keep a certain amount of money in the bank to pay claims for all of us. And there are rules and regs about that.
Okay. Okay, so let's talk about the planning piece and the terminology. What are the simple objectives of an extended care plan?
Let me step back if I could. Key terms we had down here to get a little better definition. The formal definition of long-term or extended care, the benefit triggers, let's call it. When would something start paying you? Okay. Again, it's custodial, not medical care, and it is defined as needing assistance with 2 of 6 of your activities of daily living, which we talked about a little earlier. And again,
So when we 2 of 6, that could be cooking, dressing, showering. Are that the kind of things we're talking about?
You're close. The formal definition, and it's universal across the industry, legally bound to define these things: eating, dressing, bathing, toileting, continence, and transferring. That just
Okay.
means getting in and up out of a chair.
Right.
Not
Okay.
going up and down out of your attic, but as I said earlier, the basics of life that we all do without thinking about it. When you can't for 90 days or beyond 90 days, not just recovery, but it's going to stay, when you really need hands-on or standby help of another person who has training, that is a benefit trigger to say, all right, now we're going to begin collecting on the benefits. And that is brought on by either a physical impairment, which is defined as a chronic illness, you plateaued, like I said, where it can't be cured, but can be managed by medication and therapy. Or the biggest increase now is a cognitive impairment. Under the big umbrella of dementia, where people's memory, judgment, safety awareness, management of life has deteriorated to the point where they can't live safe and independently anymore. That is skyrocketing right now. It's a slow growth, but it's the biggest threat for the future
huge.
for a lot of people.
It's huge.
Does that make sense?
Yes.
So I wanted to qualify that to say, okay, the simple objectives are of an extended care plan. If the day comes that this happens, and I'm not saying it will, I still have a kryptonite suit underneath here. I don't think it's going to happen to me, but I know better.
Right.
Okay?
Of course.
The two main
Jasmine does
objectives-
Pilates, so
Well, right, there you go. There you go.
she's physically fit forever.
Denial is a comfortable place to be, isn't it? If ever that happens, the key principles here are to ensure that you can stay at home or in a local community where you're most comfortable to protect the well-being of the people around you without wrecking their lives. So
Right.
people can still be family, and like one of my mentors said, so they can still be family members and not staff.
Right.
That's number one. Number two is to be sure you can still maintain your financial lifestyle without shredding a lifetime of savings and investing that was never meant to be spent that way, and also protecting a legacy for the people that need and deserve it.
Right.
And what we're seeing a lot is people go into 50s, 60s, 70s with more financial obligations than they ever expected or knew about. There's promises to children, there's commitments to families, there's wish lists, there's all kinds of things.
Right.
So be able to stay safe at home or nearby and keep your finances from becoming a train wreck. Make sense?
Makes sense.
It's real
Okay.
simple. Two things. That's what we plan around.
Yeah.
Yeah.
Can I just say, I love your voice. It's so
I know.
soothing
It is
to me. It's like a warm, cozy blanket wrapped around me. So I just needed to say that and get it out.
Never heard that before. Okay. All right. Thank you.
All right, so Randy, talk about some of the design basics, the elimination period, the monthly benefit, the benefit duration, the inflation protection, all of those things that sound like all these big terms that nobody gets.
No, and I just turned you off after
Exactly.
what?
But I
Sure
do
speak,
know.
it makes our eyes glaze over.
I
Yeah,
know, but
totally.
I do know when my
Yeah.
mother was in that position, there was like an elimination period.
Right. Right.
Yeah. So
That's-
talk to us a little about.
That's a good point. The first way that we structure a policy, and we're talking again about that one silo of long-term care insurance, is two foundations: how much for how long. And we try to align the monthly benefit, meaning how much you get, kind of rub it up against current costs,
Right.
home care, assisted living, things like that, to be either to cover most of or all of it, or to be a backstop to your own finances. So those two drivers are going to set the cost of the policy. How much are you asking them to pay, and for how long?
Right.
So the elimination period is, some policies will have an elimination period to say 90 days.
Yeah.
Once you're established that you need care, the clock starts ticking 90 days on the calendar and some service in there on your own dime, and then they start paying. The clients I've always helped have said, I've said 0-day elimination period. You want first dollar, first day when you come home.
Right. So that's kind of
Yeah.
like your
It's
your
a
car
way to-
exactly. You've got the deductible at the front end.
Exactly
It's
what it
$500
is.
deductible.
It's a really good
There you
way to
go.
put it.
Now
That-
I understand
That's better than insurance speak, right? Elimination
Right.
period. Right.
Right.
Monthly benefit is how much do you want to receive as a monthly maximum. You don't have to use all of it at once. We typically will start people at 3, 4, 5,000 a month, which is a good way of covering part-time home care or assisted living if they had to progress to that. So in other words, you're paying for most of what's out there. And then we put an inflation factor on it. Because if you were to look back and then look forward at 3%,
Yeah.
It's kind of mind-blowing when you look at 10, 20 years down the line.
Right.
So that monthly benefit is going to grow by whatever we tack onto that, a 3% compounding.
So there is an inflation
That's exactly
on
right.
that. So
Inflation factor.
okay, and
Right.
it's an annual.
Right.
change.
Exactly.
Okay,
Right.
okay.
They're going to do it once a year. I mean, once you start to
Sorry,
climb
I had to
whatever this-
regurgitate what you said.
Yeah.
I'm like, wait a
Yeah,
minute, what did
no,
he just say?
whatever the policy has grown up to
Okay.
at any point in time, that's the amount that you keep receiving benefits.
So that-
right.
And that could, if you start that now and it's 15 years from now, that could grow exponentially.
You would be amazed. You would be amazed.
Okay.
I'll tell you, I'm very transparent about my own work and what I do. When I sit down with clients, I say, I'm not going to talk to you about things that I actually don't own or believe in, and I will show people my own long-term care policy, my annuity with long-term care benefits, and and my life insurance policies, and my mom's annuity, which has long-term care hybrid built into the thing. And example, my long-term care policy, I think it was about 12, 14 years, or whatever it was, something like that, long term. It had 5% compounding inflation. It started out about $4,000 a month, now it's $9,000 a month. Compounding on compounding on compounding. Very good point. You don't need it now, but you want to plan now to capture where you are and say,
Right.
we're done. You can't take a second look at me in the future.
Right.
Right.
Further down the line.
That's a big misconception.
It's
I
a
think
huge
people
misconception.
don't understand that.
Well, and
Right.
people say, Jasmine, I think I'm just going to save my own money. No, you're not.
Right. Or
And
I'm
you
going
can't
to wait.
guarantee 15 years in the future, here's exactly what it's going to be.
Right.
No.
You can't.
But people think, I have to save for college. I have to save for my retirement.
The kids' weddings.
weddings, all kinds of things. And they forget about, well, what happens when we need care?
Right. Or if to the point like the person you mentioned in their 40s or something has a stroke, 40s,
Right.
50s, all those things you talked about, the wedding, the college and stuff, that all goes, that becomes optional.
Yeah.
Not a promise that you want to fulfill.
Right.
Make sense?
Yes.
It's so I laud you both for looking into this and doing it in this kind of a forum to be able to broadcast this thought process out
Yeah.
to the people that look to you for guidance.
And I hope it's
can't-
helping our listeners. It's
Well-
helping me understand it.
Well, that's what I
Well,
mean.
I'm thinking
Everybody
through this
that's-
as we're talking, so I'm
Right.
like, this is real talk here.
Right,
I'm like,
right.
yeah.
Right.
Yeah.
So yeah, we set it up to keep pace with inflation, and you're essentially leveraging your share of an enormous multi-$100 million pool of money. Okay, you set up how much for how long. Just remember that. Those two drivers are going to say what is your monthly or your annual premium going to be. Kind of like your car or your home insurance or any of those kind of things. If your
So-
home is insured for $3 million, it's going to cost more
Right.
compared to $300,000. It's a
Right.
risk thing on their side.
So this money can be used for in-home care. I'm trying to figure all this out as I'm talking to you. So
I'm going to tell you the yeses as you
So
go.
to- yeah, okay.
Myth of reality.
Right.
If I move into a senior living facility,
Mhm.
can it be used for that?
Yes, if you need assistance in that facility, not just independent living.
So can it be used for my rent or not my rent, only the care given while I'm there?
Most of all of it. Most of all of it.
But it's
Like,
if
so you have different levels. You have independent, you have enhanced,
Right. You have
and
assisted,
then you have assisted.
you have nursing home memory care.
Right, so if I'm in enhanced, that middle sector, does it cover all or part of that?
Yes, because part of requiring assistance in a facility is your cost of living there.
Oh,
If you're assisted living, to pick
See?
that middle ground,
right,
figure about $6,000 or $7,000 a month right now.
yeah.
Notice I said right now.
right now.
Okay? So yeah,
Fact,
if you have a
I'm-
long-term care policy that is either you took it out a month from now and it's sitting at $5,000 or $6,000, it's going to pay that amount. You do it now, and you need that kind of care down the line. It's going to have grown to, like I said, we
Who knows?
align an inflation protection factor
Right.
to kind of
Right.
ride along with it and stay
Okay.
in the same. So you're not here when it's here.
Now, is there a maximum amount it will allow you to withdraw per month?
Yes. So we set a monthly benefit, and then for how long?
Right. So, and you can adjust that number.
Adjust every one of those
Because we don't know
things.
how long we're going to be.
Exactly.
People stay in those facilities for years.
Exactly. Right. And so I want to keep flavoring the conversation to just remind you that 80% of extended care is performed at home. You never see them. We see the people that we go visit. Right?
Right.
Yeah, you're nodding your head. We've all done it.
Yeah.
That's 20% of what's going on. Everybody's aging.
Right.
Okay? You hear the stats, 10,000 people a day are turning 65 and it's going to keep going.
Right.
Well, guess what? 10,000 people a day are turning 80 and 81 and 82 also.
Right.
You got, so again, I hate statistics, but you look at where we are in this whole thing.
Right.
And to your point, these kind of policies will pay for just about everything you can imagine. Home care, home modifications for safety, for access, for the grab bars, the ramps, the assistive, the protective technology, monitoring technology, okay? They'll pay for meal transportation. They'll pay for rides to medical facilities, okay? This is all in your home. A lot of people want to age in place.
Yeah.
Right.
Probably not an elevator, but a stair lift, okay? A lot of different things like that. The long-term care insurance probably has the most flexibility on it of all of these solutions. So any level of care, Shannon, and I want to finish answering what you said. If you take $5,000 a month times 12 months, that's $60,000 times a 3-year policy, that's $180,000. It's kind of like if you had a bank account with your name on it and it had $180,000 starting balance, your monthly maximum you could go and get would be $5,000. Like I said, $5,000 a month for 36 months is that amount of money. If you really only need
Plus
$2,000, right, plus inflation, thank you. If you really only need less than that, that 3-year term, you can stretch that way out. It does not expire until the money
So
goes
it
away.
doesn't expire in the 3 years. It expires when the money expires.
runs
When the last dollar is gone, exactly.
Ah.
And some people will say, okay, I got $5,000 a month sitting here available. I'm only going to pull like $3,000 of it.
Okay, yeah.
I got part-time, I only need help 3-4 days a week now.
Right.
I'm going to keep it in the bank.
Or I have a pension that's coming in that can cover
Thank you very
some
much.
of that. So I'm still not pulling from my savings.
It's a layered strategy or an enhancement to your own cash flow and your assets. So you're not completely reliable on the self-insure because you're not insuring, that's all your own money. But when you bring in something like that, it's an adder. You can use it first, last, in between, or in addition to.
So is it changed from what long-term plans were like 20 years ago? Like for our listeners that might be thinking, oh, well, my parents got it and it was not a great plan. Like, have they improved nowadays?
They have.
Or are there just different plans out there and they need to speak to someone like you who could sort of direct them because they're not all the same, right?
Yes and yes, because early 90s, late 80s, early 90s, when actual insurance for this started, it was known as nursing home insurance.
Right.
Because that's all there was.
Right.
There was no such thing as assisted living.
Right.
Even 25 years ago, if you're looking for a home care agency, it'd be hard to find them. Now you can't count them. So yes, they've covered all of the bases all the way around.
Right.
Yep, everything. They've
So I
advanced
just
quite
think
a
for our
bit.
listeners that may have gone through a negative experience with a parent who had a plan and think, I'm not doing that because this was horrible, it's changed. And revisit it. At least do your
Dramatically,
homework.
Jasmine.
Talk to somebody like
Absolutely.
Randy.
Yep.
They can tell you what the difference is.
And we barely touched the surface today. Like,
Oh, yeah.
we just got
Yeah.
started.
We need you back for part 2.
We need a part 2.
I
But
would, yeah. I'd love to.
tell
yeah.
us this, okay? If you're listening and all these light bulbs went off for you, what's the checklist you're going to give those people for the next 30 days? What are 3 action steps they need to take?
3 action steps.
Call
I'm glad
you.
you asked me this. No, really, I always say, look in the mirror, think about this, accept the fact that despite or because of your family history, you could very easily live a long life and need some help. And then think through your priorities if you want to protect, now that you kind of get it and you've had some prior experience, and then make a thoughtful and reasonable plan for yourself, which really is for your family. Make preparations now with clarity, with peace, and with professional guidance. I do all kinds of informational workshops to help people understand this whole thing from a higher perspective.
All right. Will you come back again?
Absolutely.
I think we have way more to discuss and we're running out of time today.
We do.
But Thank you so much, Randy. We will put all of your contact information in our show notes.
Absolutely. And hopefully you got some great information and some good takeaways today, and you will tune in next week, like and follow, and join us again on Help Nobody Told Me.